How's it going, everybody? Welcome to the live stream. This is the second weekly live stream, but I just got a question. Any giveaway or redeem code? We're actually going to start those next week. So I think I'm going to actually give a nice little, maybe a little hint, and we're going to have some questions and answers for the stream next week. And if you guys can answer those questions correctly, then we'll give away some USDT or some USDC or just some crypto in general. But we're definitely going to start that very soon. We're also, just in terms of the future of the stream, we're going to be working towards getting some guests on the show, some traders out there from crypto Twitter, so we can do some short little, maybe 15-minute interviews, and I can look at charts with other people. But let's go ahead and get started today. Hello, Crypto Eyes Whale from Greece. Just to get started, have you guys been watching F1? I know it hasn't started yet, but is anybody here an F1 fan? Obviously, Bybit's a pretty big F1 fan of Red Bull, Max Verstappen, and Sergio Perez. But let's go ahead and give it maybe 2 more minutes for people to fall in to the stream. And then we're going to go ahead and get started with a quick presentation. If you guys weren't here last week, the format was we ran through a quick presentation where I go over just a few topics, kind of maybe call it a lesson or a lecture. But we're going to do that really quick this time. It'll probably take 20 minutes instead of somewhere around 40 or 50 like last time. And then we're going to go into those charts. We're going to do some chart examples and finally some question and answers. I already have one question from the Discord chat. But if you guys have any questions that you'd like me to address at the end of the stream, go ahead and drop those in the comments right now, and I'll write them down, and I'll make sure to cover those. But let's jump straight into this. Let's just get started with this presentation. If nobody wants to share their favorite F1 team, F1 driver, if anybody's excited for Bahrain next week or next weekend, I definitely am. But as you guys know, or maybe don't know, this presentation is called Trading Mindset. The stream in general is called Trading Mindset, and we just go over mostly the emotions and strategies of cryptocurrency trading and how you can use a few different little tips, a few different strategies, a few different methods in order to improve and be able to properly manage your emotions and strategies for long-term profitability, which basically means if you're trading for 2 years straight, you're not making sure, you don't have to make sure that you have some trade that hits 500% in order to make up for all your losses. You have managed trades, a proper risk reward ratio for all of your trades, and everything works out in the end. And you can remove those emotions and basically not have to worry or stress about your trades as much. Let's go ahead and jump into this very quick disclaimer. The presentation should not be interpreted as financial advice, as you guys know, or an investment recommendation. Trade and invest at your own risk. If you've been trading, you know there is risk. That's how it always goes. But first, I'm going to go through this really quick in case anybody just is curious how a logbook looks for trading. This is very, very useful, especially if you're just getting started. Setting up a logbook, even if you're paper trading or trading with, $5 or $10 per trade, and you're not really worried about, making money in terms of your overall capital, you're just trying to learn. The only way you're going to learn from the trades that you've made in the past is if you write everything down, you log everything in your logbook. So let's go ahead and switch over to that. I'm going to move over to my second window, and we're going to take a look at my trading logbook example. So this is just how I set it up for Excel. I don't personally use an Excel spreadsheet. I write everything down physically, but I do include every single one of these things. It's really just a preference. If you think you're going to check an Excel spreadsheet more often or check a physical notebook, just whichever one you're going to use more often and actually look back on and stay or keep up with. Because that's what it's all about. If you don't keep up with actually logging your trades, you're going to get behind and you're just going to forget some. And you're not going to learn from those trades, whether they're successful or failures. So I go ahead and start out with the date, the time, so that you have a general idea whenever you go back to your chart of where you can just zoom into. So let's say you have your lines all on the chart, but you don't really remember when you made that trade. You just go, all right, it was March 7th in the morning. I can go back to that candlestick or that 4-hour, that 1-day candlestick. Just get a good idea as to what your mindset probably looked like or what the chart felt like as you were entering it. Obviously your pair, the trade type, long or short, your entry price. Obviously, if you're trading with leverage, you can include a nice little column that includes your leverage level as well. But I just like to put long and short, and then I throw leverage on the end. Entry price, 41,000, just an example. Exit price, plus a few percentage points, 44,000, where you set your stop loss. That gives you let's go ahead and give that calculation, a profit percentage based on that exit price of 7.32%, stop loss of 2.94, and your risk reward of 2.49. I did show y'all in the last episode or the last live stream how to set up that risk reward ratio and calculate it automatically using the long position or the short position tool. So if anybody would like to see me go through that again, just drop a comment. Your position size for this individual trade. This doesn't mean your overall holdings in crypto. This means how much either Bitcoin or whatever cryptocurrency you bought or technically sold if you're on the short side. And then finally, your trade thesis. So this is where you write your specific reasons for why you are entering this trade and why you are exiting at your sell target and why you will exit at your stop loss if it reaches that level. So a reason for every line on the chart, you can honestly just say, all right, I set my exit price at 44 because that's just below a common resistance on the chart. A support and resistance flip will most likely find resistance at that level, probably not breakthrough, or just based on the risk reward, this is where I want to set my sell target. Same with the stop loss and your entry price, just a general reasoning for why you are entering this trade and why you set your levels at specific prices. Finally, you have your results. So here I would either put success or failure, or basically if it hits your sell target or your stop loss. Although your trade hitting your stop loss, you don't necessarily have to count that as a failure. You can count it as a lesson. And as long as you were setting proper stop losses with good risk reward ratios, it's not a failure in the long term. Your result percentage, so you can either put positive 7.32 or negative 2.94, depending on how the trade goes. And finally, some quick notes as to how you felt about the trade. Obviously, you enter this all after the trade has completed. Basically, what did you learn? You don't have to put anything there if you don't like to. But let's get back to the presentation real quick. So that's how to set up your logbook. It'll be the same setup if you set it up physically. You can include a few more things, a few more notes if you'd like. It's all up to you. If you'd like physical journals, I personally do because it just helps me remember, and I'm not great about checking Excel spreadsheets for trades. I've tried it in the past. But let's go ahead and get into emotional highs and lows. So this is really just about the various situations that you can get into in terms of just trading in general. Like if you're on a winning streak or a losing streak, or you make a few good trades or a few bad trades. You'll see every situation listed here, and you'll feel every situation. You'll experience every situation if you trade for long enough. So first of all, basically all of these situations can manipulate your emotions. You're going to feel emotions based on these situations, and it's just all about, at the end of the day, and I will go through each example, at the end of the day, reverting back to your regular strategy, a baseline of emotions, being unbiased. Let's go ahead and go through these examples real quick. So first we have winning streaks. When you're on a winning streak, you might say, I can't lose. And you'll probably, not necessarily probably, but you may end up opening up trades that don't align with your strategy. And it's the same thing with big wins. You're saying, why aren't I doing this every time? Why am I not going for a plus 70% trade or a plus 50% trade every single time? And then on the opposite side, you have losing streaks, saying, I can't win. You have 5 trades in a row that fail. You're going to be very demoralized, and you're probably going to say, maybe I should change my strategy up. I don't think my strategy is working. I've hit 5 stop losses in a row. Maybe I should push those down, and instead of negative 2.5, I'm making it negative 3.5. But you don't really think about how that affects your overall trade, your overall risk reward ratio. And if you don't change, both sides, if you don't change your sell targets and your stop loss, you're going to end up skewing yourself towards hitting less stop losses and probably you might hit the same amount of stop losses, but you'll just lose more on each trade whenever those stop losses do hit. So there's a lot of situations that you can run into that can kind of be affected by these streaks, big wins, big losses. A big loss, I need to recover those losses with a big win. I've personally felt this a numerous number of times hanging out with Greg, who's also a trader from Crypto Beat. He has hit some big losses. Not that he's a bad trader, but it's just what happens whenever you trade with leverage, which he does trade with usually lower leverage. But when you hit that big loss, you feel like, all right, now, last time I did a 2x leverage trade. Maybe next time, because I lost that one, I need to hit a 5x leverage trade to recover those losses and also get profit. And that's just, again, you are straying from your overall strategy. If your strategy is proper, it's been tested, it's been proven over time than whether you have big wins, big losses, a losing streak, or a winning streak. You will revert to an average of net profit in the long term, and you don't actually need to change anything. Now, yes, whenever you see these situations occur, whenever you see a nice winning streak, go ahead and take notes. Like we said, move back to that logbook and say, all right, why do I have 5 trades that did well or that succeeded in a row? Is it because I'm mostly longing and we're in a bull run? Why do I have mostly losing trades? Is it because I'm mostly longing in a bear run? There are lots of situations, but basically you'll probably run into just about every single one of these situations, of these streaks, and of the emotions associated with them if you trade long enough. Finally, a trading hiatus. Basically, if you take some time off, you say, all right, I've just been so busy with work, I've been so busy with family, whatever it is, and you take some time off trading, you come back, and a lot of the time you say, maybe I should try something else. It wasn't really working out last time. I was kind of at the end of a losing streak. And you kind of compound these two sets of emotions, both the losing streak from last time, and whenever you go back to thinking about those, maybe you didn't take proper notes, and you say, well, I was in a losing streak definitely because I was longing all the time. I need to be shorting. And because you're just coming back from a hiatus, you're most likely going to be thirsty, or not necessarily greedy, but maybe thirsty for profit. And you'll make bigger trades that you're supposed to, in proper risk reward ratios, sell targets that just don't hit. So there are a lot of trades that can, or there are a lot of emotions that can definitely go into and come from streaks. These will lead to emotional highs and lows, and you just have to revert back to that general strategy that we talked about last week. If anybody has any questions about the trend following strategy, about risk reward ratios, about emotional trading in general, go ahead and drop them in the comments. How's it going, Abi? Is that Spanish? That looks like Spanish. I'm sorry, I don't speak Spanish too well. I wish Andre was in here. He speaks Portuguese and Spanish. But any questions, try to keep them in English just because I won't understand them. All right, now we're going to go into the ATR indicator, or what's actually called the average true range. This was developed by a guy named J. Wells Wilder Jr., a legend, kind of from indicators. I believe he did create one other indicator. I just can't remember. There's like 10 main indicators that I've really done research on and have used and tested and everything. And I think there's 3 or 4 guys that have created those 10. So it can be very confusing trying to remember which guy created these 2, which guy created these 3. It's a lot easier whenever you have something like Bollinger Bands. You just say, all right, John Bollinger? Yeah, that's correct. All right, so the average true range, or the ATR indicator, is an indicator you can apply to your charts, providing market volatility data over a period of time. I'm going to throw up a chart example in just a moment, and we're really going to get into how the ATR indicator can help you out, but I'm just going to run through kind of an explanation first. So the ATR is presented as a moving average of true range. So this is where it gets tricky. You have true range, or TR, and then you have ATR. So you have basically, here's how I explain it to my friends. True range, or TR, is basically that magnitude between the low and the high. There are multiple ways that it's calculated based on when the candlestick closes. And if you have a negative range and if you have a positive range, you take the absolute value. Basically, imagine it as the stretch between the bottom of your, like the lowest our price travels to within that candlestick, to the highest the price travels to within that candlestick. That gives you a true range, and you take an average of that over time, and it gives you a nice line, kind of like a moving average. Think about it. It's calculated in the same way. You take an average over a period of time, so a number of inputs, but yet again, it'll all make way more sense as soon as I jump to the chart and show you how to manipulate that the input. So that input length defaults to 14 periods. Periods mean if you have a daily candlestick chart up, then it'll be 14 days. If you have a weekly candlestick chart up, it'll be 14 weeks. So the period represents whatever your candlestick time frame is. So it defaults to 14 of those periods. Usually, if you're on the daily chart, 14 days. I like to keep it at 14. You can manipulate that level if you make it longer. So if you set it at 20 instead of 14, it's going to be a little bit more smoothed out. If you set it at 3 periods instead of 14, it's going to be very volatile, and it's going to react to shorter term price action rather than an average of 2 weeks. It's just going to be an average of a few days. So it's going to be more responsive to the price action and volatility we see. So keep it at 14 just to get started with. You can obviously play around with, 21 days, 28 days, 30 days, all the way up to 365, like we do on moving averages. You go up to 250, whatever you want. It's all about finding something that works for your strategy and works for your trades. So applied to trading strategy, the ATR, or average true range, as we now know, offers a measurement of average volatility within a period of time and may be used to determine proper levels for sell targets and stop losses. So that's basically what I just said, but the application is that you can use that true range. You can use that average of maybe our last 2 weeks of magnitude or volatility. So just think about it as volatility for, each day averaged for the past 2 weeks when our input is 14. Similar to a moving average, except instead of it being price, it's volatility or how much we move within each day. And that can be used to determine sell targets and stop losses. So I'll show that on the chart now because that'll make a lot more sense. But basically, whenever you're setting up a sell target or a stop loss and you want just a good general idea of within the past, 2 weeks, what's the most we've kind of stretched towards the long side, most we've stretched towards the short side. Basically, whenever we have, I can actually zoom into something like the 2 hour. It's a little bit more applicable for these lower term time frames, these shorter time frames. Basically, whenever you look at something like this, maybe a nice little trading range between here and here, the ATR will give you a good average as to how much we can possibly stretch down from our average price movements per day. So I'm going to throw that indicator up just real quick. I did get a question, where can you get free indicators? I'm not entirely sure. I know there are free trials for both Coinigy and TradingView. I actually switched from Coinigy to TradingView like a hard stop about maybe 6 months to a year ago. I was just kind of tired of the functionality. Functionality on TradingView is a little bit more preferable to my style and the indicators I use and everything. So we're going to type in ATR under indicators up through here. But all of these indicators will be free. I believe there are paid indicators that kind of people create for both Coinigy and TradingView, but I've never used a paid indicator. I've looked at them, but I've never used one or found one super useful. I'm sure there's some that are, but the free indicators do just fine. So to answer that question properly, there aren't any free charting softwares that I've personally used. I'm sure there are some out there, but also exchanges that you use. You can have sometimes limited functionality, but on some exchanges you have equal functionality to what you'll see on TradingView or Coinigy, because a lot of the times they do have a direct API from an exchange provider or a chart software provider like TradingView or Coinigy. So now we have the ATR up on the bottom of the chart here. We can see that it can range all the way down from, for this situation, Bitcoin to US dollar tether on the 2 hour time frame. It can range all the way down from 270 or 473, all the way up to a peak right around 816. So what do these numbers mean in this specific situation? So this means that for this period of time, we are looking at the average volatility of right around 475, and this represents volatility for the last 14 periods. And our current period is 2 hours, or our current candlestick length is 2 hours. So the past 14 times 2 hours, the past 28 hours of price action, this is our average volatility for all of those periods and all of those levels, that entire period of time. It's right around 472, 471. That makes sense because we look at that price action through here. It's not extremely volatile. We have a range based on closes from right around 38,952 up to the top side of 39,481. And then for our shadows from right around 38.5 up to 39,750. So we have tighter volatility throughout this period of time. Very intuitive for something like this. But as we move towards the following candlesticks and really the following days of price action, you can see that our volatility is increasing by a pretty drastic amount. And that gives us, through almost a smoothing effect, like you can see on a moving average, a slow rise up in ATR, or average true range. So based on this period of time, you can look at your ATR through here and say, all right, the average volatility or the average magnitude is going to be right around $714. What you can use is this price level, or right around this ATR level, to basically say, all right, if I'm going to set a stop loss, I need to set it, and my entry is at maybe 39,000 flat. If I'm going to set my stop loss, I need to make sure it's at least $700 away from my entry, because that's average volatility. That's price action that's normal for this period of time. And it doesn't say, so if we move down $700, that won't mean that we have broken down or broken out, because it's just about average. It's just about normal for this period of time. So basically, whatever number you see on the chart, and our current ATR is right around $737. If you were to make an entry either on the long or the short side, you set your stop loss either below or above your entry. Make sure it is at least by right around $700 for this period of time. And this is going to change based on your time periods. So we go to the daily, and you can see that ATR just booms up to $2,500, because now we're looking at the average volatility for the last 14 days rather than the last 28 hours. And we have a lot more price movement over the past 2 weeks than over the past right around day. So that's what we're looking at from the daily candlestick time frame. If we move out to the weekly, it's going to be even bigger. To the monthly, it's going to be giant. From the weekly, it's $7,000. So for the past 14 weeks, we've seen an average of $7,000 in price moves from peak to trough, or from top to bottom, rounded, smoothed out, averaged for those past 14 weeks. So that is how the ATR is calculated. That is how you can use it for your strategies, for setting stop losses and sell targets. That's really what it's best for. I probably wouldn't use it to set an entry. You can use it to help with an entry. Yet again, like we were talking about last week, I got a question about the RSI and can it be used to determine an entry? Not by itself. Same with the ATR. Same with almost any indicator you're going to run into. You can't use one indicator, or you can do anything you want. You shouldn't use one single indicator to confirm an entry or to determine if you should enter or exit a trade. You should use a combination of indicators, price action, volume's an indicator, but a couple indicators and price action at all times. You need to confirm based on multiple metrics. So that's what we have for the ATR. Hopefully that makes sense. If anybody has any questions about that, I can run through it one more time as well. So let's get into these last couple slides. Like I said, this presentation will be nice and quick. So I believe this is the final little note from the lesson, that's beating other traders. This is something I've talked about or spoken about personally, but I've never really gotten into. It's something that just kind of seems like you learn it over time through experience, but I've never really seen people cover it in specific circumstances. Beating other traders basically means, how can I set my stop loss? How can I set my sell targets, or manipulate it slightly, set it a little bit higher, set it a little bit lower, such that I can beat out other traders that are looking at those exact same levels. So whenever you're looking at a chart, let me run through the slide first. So whenever you're applying classical technical analysis to a popular chart, many traders, both retail and institutional, basically any trader who's using technical analysis, will be looking at a lot of the exact same levels for their trades. So if there's 100,000 traders out there, and 5% of them are looking at Bitcoin, and maybe another 20% of them are looking at the same level you're looking at, that's a lot of traders, and they're going to be setting up orders, stacking up, not necessarily stacking up the order book, because they can set stop limits that are hidden until we hit those prices. You can basically predict that at those popular levels of support and resistance, ones that are very obvious, or psychological levels of support and resistance, you can predict that other traders will also be setting their sell targets, their stop losses at those same levels. When those stop losses hit and they start cascading, or even just regular sell targets hit, we're going to see that affect the price. So we actually see this happen a lot with psychological support and resistances. So let's say, or let's go all the way back to 2017. A lot of people, I'd say, you can almost say most people, were looking at that $20,000 level throughout December and January of 2017 for Bitcoin to US dollar. People are saying, all right, we've just got to break through 20,000 and we're going straight to 24,000 or 28,000. And whenever we have this communal sentiment of everybody saying 20,000, we've got to break through it, we've got to break through it, you have the other half of traders that are saying, all right, since everybody's sentiment is all aligned at breaking through 20,000 and we have to keep going higher. This is really Dow theory and sensible analysis, which I can get to next week. Whenever everybody's thinking the same thing, we're usually going to see the opposite reaction. So when everybody's saying, all right, we've got to break through 20,000, you're going to see a lot of traders set their sell targets just below 20,000, such that they're predicting the same thing. They're trying to beat out other traders. They're saying, if everybody expects 20,000 or a breakthrough 20,000, we probably actually won't see that. So I should set my sell target just below there and sell out before that big sell-off happens if a bunch of people set their sell targets at 20,000 exactly. So one of the main lessons that we get from that is you never want to set your sell target at an exact psychological resistance. So if you have something like 88 Cardano, I think it's actually pronounced ADA or ADA. I never knew this. It might be at $1 or $1.50 or $2 depending on what the current price is. If it's at $1, if we're below, we're coming up on $1. You don't want to set your sell target at exactly $1 because that's the first price that people's eyes and minds are going to go to whenever they're looking at the chart, because we have a lot of confirmations at that level. We've touched that level in the past. We push up against it for resistance. When we break through, we come back down. It acts as support. It's a great support and resistance flip for Cardano, and I've been trading with that exact level for, I guess, months to probably a year and a half now. If you set your sell target exactly at that level, what we may see is what's called an approach. So an approach is whenever our price comes really close to $1 if we're coming from the top side, really close to $1, but doesn't actually hit $1. It comes and it just goes to like $1.03, and then we push right back up because people have all of their either stop limits or stop sells or limits orders. The order book is stacked up at that price level such that whenever we come down and we approach that, anybody who's trying to beat people out will see a cascading effect of all those orders just pushing us straight back towards the opposite side. So I can show that on the chart and it'll make a lot more sense real quick. And we're just going to talk about how you can use these exact price levels or manipulate your sell targets to beat out those other traders. So we're going to take the ATR out real quick. So let's go ahead and push through to right around, let's see, we can take a look at 40,000 real quick. We're currently at 38,700 or so. 40,000 on the dot. This would act as a psychological resistance. In most circumstances, we've actually seen pushes through based on those topside shadows, but not based on those topside closes. We've actually only seen an approach based on these topside closes, which is what we're talking about. So we try to push up and we say, all right, if we can see a close above $40,000, then we should break out and we should push all the way up to this next area of 41.8, and I should make a long side trade. But we don't actually see that close above that level. We only see an approach based on these topside closes. The same thing a lot of the times will happen with topside or bottom side shadows. And this is really what's going to affect those stop losses and your sell targets, because the closes don't matter for your sell targets or your stop losses. It's only the shadows. So if we push up against $40,000 and let's say you have a long from this level for whatever reason, let's say we see a nice close above this level, we see some volume to push us back up towards the long side. You're like, all right, $40,000 looks like a really nice resistance. We pushed slightly above it in the past, and I'm going to set my sell target there. Well, that was pretty easy. That was pretty intuitive. Just looking at the chart for 20 seconds, I said, all right, we're going to make a long side trade. We're going to set our sell target at $40,000 because that's where we're seeing, we haven't seen a close above that level, but we have seen two penetrations. We've seen two top side shadows. Push those levels. Now's the time when you stop yourself and you say, all right, remember, we need to beat those other traders that are thinking the exact same thing that I'm thinking just this moment. So what I would do in this situation, and what it means by beating other traders, is actually moving that sell target down by just a couple percentage points or even a fraction of a percentage point. Just instead of setting it at 40,000, set it just below 40,000. It doesn't need to be perfectly at minus 0.1% or minus 1% from that level. But by bringing it down just slightly from that very common price level, that very common sell target, you will have a much greater chance of actually hitting your sell target rather than seeing an approach. Because in a lot of situations like this, if we had a little bit more of a perfect alignment at 40,000, if we had our topside shadows just barely hit over and over again, what we could see is what's called an approach, and maybe we come up to 39,879, but we don't hit 40,000. We come back down and we continue this sideways trading range, and your sell target doesn't hit. But to avoid that circumstance, you move down your sell target just a little bit, such that it's maybe 39,850, and you're going to hit that sell target a larger percentage, a larger proportion of the time. Same thing with your stop losses. So same thing towards the downside. if you were to set a stop loss at somewhere around, 38, no, it would be below there, somewhere around, 38,651, you're like, all right, that's our bottom side closes. We've got some nice support around that level. All right, that looks good to me. You set it just below that level in case we see an approach rather than an actual touch. So same thing with a long side, or same thing with those sell targets, we just flip it. So let's go ahead and get back to this presentation. I don't think we have too much left, but we're going to get through this last slide, and then we're going to get into some actual chart analysis. So let's go ahead and jump in. All right, is there anything left? One can make minor adjustments to beat out other traders and their potential orders. Like I just said, you move it or manipulate that level just slightly. You can beat out those other traders. All right, what strategy do you recommend for scalping? I actually don't have any scalping strategies. That's just a whole other category of trading, in my opinion. You have to have a lot of exchange accounts. You have to have probably a couple bots and a couple APIs that either you buy or you make yourself if you're good with programming. But I don't personally have a strategy for scalping. It's definitely not my expertise or my specialty. But if anybody else has a good strategy, feel free to drop it down below. Any other comments? I guess we can get into that quick question and answer, and then we'll get into some examples and chart requests. So right now, if anybody has any chart requests, go ahead and drop them in the comments, and I will get to them in just a moment. So we do have a question from Discord from a young gentleman or lady named Peak Fam. The question is, how does a stop loss know when to stop? This is kind of my thing. On YouTube, I've made like 10 different how to properly set a stop loss videos. So how do you properly set a stop loss? How do you set a stop loss that actually hits? How does a stop loss know when to stop? So I'm going to show this on the chart real quick because it will be a little bit clearer. So let's go ahead and say, all right, we are on a long side trade and we're going to set a stop loss towards the short side, so towards the downside. And let's just say if you see a close, or not even a close, just any candlestick, any bottom side shadows below, let's just set it at 38,500. Nice round number. If we see price travel below 38,500, that's at 504, but let's say 38,500, then I want my stop loss to execute. So for a stop loss order, there's actually two different prices or two different numbers that you're going to input. There's three different numbers. One is your position size, and the two others are going to be your execution price and your stop price. So your stop price if you're setting a stop loss for a long side trade, your stop price, you want that to be just slightly above your execution price. What's going to happen is, so let's say you set your stop price at 38,504, you set your execution price at 38,474. What happens is whenever we come down, and as soon as the price hits 38,504, as soon as the price hits your stop price, an order will be executed and submitted to the order book at your execution price, so at 38,474. As soon as the price barely touches 38,504, an alert goes off in your exchange or in your order book, and a stop and a limit order is executed at 38,474. Hopefully that makes sense. That's basically how does a stop loss know when to stop. It knows because it's alerted to at a specific price, and then it goes ahead and executes just slightly below that level. Now, there are more simplified stop loss orders that will alert or stop and execute at the exact same price. But my most common strategy, and something I always preach, is to set two separate levels. You set your stop price just slightly above your execution price. And what this is going to do is save you a lot of hassle in the very specific and sometimes rare situation, such that we see something like a falling knife or just very quick price action that pushes us straight through. By separating your stop price and your execution price, you will have a much greater chance of your stop price going through, just in case we fall super fast. Same thing towards the short side. If you have a short side trade, you want to set your stop price or your stop loss above your entry price, such that if we come back up, you limit your losses towards the short side, towards the long side. If we travel towards the long side and you're on the short side, you're losing money. If the price goes up, you want to stop those losses or limit those losses to an absolute maximum. And for that situation, you would set, let's say you set your stop loss at something like 40,287. You'd set your stop price at that level. You set your execution just above that level, just a little bit of magnitude. It's not going to hurt your actual your percentage that much. It's going to be a very minuscule amount. You separate that, and that gives you the greatest chances of your stop loss properly executing and avoiding the headache and all the hassle of that specific situation, or whenever we see the price either shoot up straight through your stop loss or shoot down straight down through your stop loss. I think this is probably the most common comment and message I've ever gotten on Twitter and YouTube is, why did my stop loss fail? Why didn't it execute? Why didn't it work? This is most likely the reason. So that's what we have. Scalping, I'm going to look at some questions real quick. ETH analysis, please. All right, let's do some ETH analysis in just a moment. And then, let's see. Hello, Anmol. How's it going? Anmol Sharma. Scalping is not for the faint-hearted. You need to be strict with your risk management and stick to your trading strategy. That's true. I haven't done much scalping, but I believe that those two tenets apply to all trading. But in terms of what I've seen, you really need to be able to automate things and probably have a little bit of history in like a technical background or programming. Otherwise, you're going to be spending a fair bit of money using somebody else's program. What's Kilo? Is that a coin? Or are you talking about Kilo, the Discord? Kilo in Discord. What strategy is the best to trade the bit? I can take a look at bit, and we can see if that'll work out. Any admins around? I believe Kilo was here earlier. Kilo was here at the beginning of the stream. He is an admin, but let's go ahead and take a look at Ether, and then we're going to take a look at Bit, and I'm going to talk about some strategies that you guys can use for trading in general. So let's move over to ETH to US dollar tether. This is on Bybit's pair. We actually have some leftover indicators from last week's stream. I can't even remember if this trade, it looks like the trade never even went through. We set that at right around 27.60. If we saw that close above that level, we would go for a sell target up through here. Stop loss right through here at close to negative 1.23%. Sell target for plus 4.84%. So let's go ahead and take most of these lines off the chart. We can leave just a couple of them because they will most likely still be relevant. So let's go ahead and check this through here. It looks like we set that a little bit above. We're not quite at that level yet, and it's no longer going to be acting as a resistance at that exact level. We'll actually want to push that down just slightly based on our previous price action, based on the fact that we just slightly penetrated that. So we're going to set that right through here, new resistance at 27.25. We're going to keep this same resistance up through here at 28.95 just because we haven't seen any price action to actually manipulate that level or change that level. Most of the time, whenever you're checking your charts throughout the day, you won't be moving these lines around a lot. Actually, the reason we just moved those lines is because we're on the 2 hour instead of the 4 hour. That is my mistake, but we can still use them actually. So they still work. As we move through the time frames, a lot of the time you will find yourself seeing exact levels that work for, you know, both the 2 hour and the 4 hour and the daily. It's just how it goes. And if those line up perfectly, you can be a little bit more confirmed for those actual support and resistance levels. So let's go ahead and take a look at this actual, what acted as a support, but will now act as a slight resistance. We did see a slight penetration based on these topside closes up through here. Are we going to want to move that just slightly? I think we might. We might want to, but also we did see slippage. I feel like based on our price action through here, that our price level, or actually our resistance, what acted as a resistance, what will now act as a support if we can break through that level and come down and bounce off of it around 26.12. Is that a better price level? That does align with our breakout area through here. I think that's what we were doing last time. We were trying to choose a breakout area that works based on our time frame. So on the 4 hour, and we can definitely compare this to the daily as well. We're going to move this down just slightly and then see how that looks on the daily. So that aligns pretty well with our price action through here. What then acted as a perfect support through here. We break down, we come back up. We do still see that slippage. We're going to see that a lot based on those topside shadows, but off topside closes, just some slight slippage. That's why we like to confirm just slightly above our support or our resistance slips. So let's move over to the daily candlestick chart and see if we can see anything else. It looks like we're not getting a lot of information from this through here. We did see a nice bounce through here and through here, but is that the same as what we saw on the 4 hour? No, I believe we actually saw this act as a breakout confirmation on the 4 hour chart, this area through here, these two candlesticks, but it's acting as a support from our daily candlestick time frame. So we're going to keep that in mind as we move back to the 4-hour. And then what we're going to do is take a look at our previous price action since we're now on the daily candlestick time frame. First, we're going to take a look at this level through here and check for alignment. It looks like we did see that area most likely act as a breakout area through here, but we didn't see it act as any type of support except for possibly a push back up to this area through here. We definitely saw some margin between this area acting as a support and what we actually saw from those closes. And then finally, we want to look at our absolute bottom support, which is going to be through here at right around 24.61. Here's what I'm going to do. I'm going to set some nice supports through here and through here, and then we're going to compare these to the 4-hour and see if that actually aligns. So it doesn't look bad for our lowest level. It also doesn't look terrible for our secondary support. So through here and through here. First, we're going to check our price action that we were looking at from the more intermediate term and see how we're aligning through these levels. It doesn't look perfect, but remember, we are moving from the longer time frame to the shorter time frame. We're going to see more volatility, and we're not going to see perfect alignment. It actually works quite well for this secondary support. So I'm going to take this first support off, and we're going to focus on that secondary support at the moment. And that actually gives us some good levels to trade off of. This is going to act as a resistance at the moment because our price is currently below this level. And here we actually have some decent levels for Ether to US dollar. So towards the long side, what are we looking at for resistance? We're first looking at this level through here. Honestly, if you were trading this, I would probably go towards the shorter time frame. I go towards something like the 2-hour or the 1-hour. And if you are trading on the 4-hour, I would probably use just a very short-term confirmation, maybe something through there. Trade up towards, see, that's tough because we did see this penetration through here. We do see this a lot, especially on cryptocurrency, not necessarily on Ethereum too often, but we do see it on smaller cryptocurrencies. Would be this penetration, or basically this whipsaw towards the long side. And what we have to do is we have to go back towards where we were previously looking at. Where was our previous resistance? That's going to be our proper resistance. Whenever we see something like this, it's not going to be the top side of these closes through here. It's going to be the top side of those first closes like we see through here. We actually see alignment at that level. And we don't see much through here. We see slight alignment based on that breakdown area, but we're most likely not going to return to this area again, and it's not going to act in the same manner. So we're going to focus on this area through here. If we're looking at long side confirmations, it's going to be anywhere between 25.89 and 26.12 for a jump to our next area of resistance, which you could probably set through here if you are trading on the short term, but I would trade this on the intermediate term, which would be closer to right around 27.25. We can go ahead and set up a long side calc for this real quick and see what our stop loss would be and see what our target would be. Looks like a target of right around 4.42% based on an entry right around here. And where would we set our stop loss? I'm going to move this over in just a moment. So this is actually visible. So we're going to move this over. We're going to zoom in a little bit. If we set an entry just above this resistance, maybe we see a nice close just above there, close to 26.14. Maybe we set a stop loss just below our support that we saw through this area. So we're going to bring this up and we're going to set it just below. This is that situation that I was actually just talking about. So we're trying to beat out those other traders that are maybe setting their exact either entry target at 26.15 or their exact stop loss targets at 25.89. We are setting ours just slightly below. I'm stretching it the wrong way. We are setting ours just slightly above our entry and slightly below that resistance. We are setting our entry slightly above our resistance, and we're setting our stop loss slightly below our support. There we go. And then for that sell target, yet again, we're going to move it down just slightly to beat out those other traders, maybe just through here. Now it's a sell target of 3.93%, a stop loss of 1.37 with a very nice risk reward ratio of 2.87. So that's just an example of a long side trade using the trend following strategy on Ethereum to US dollar on the 4-hour candlestick time frame, really for a short to intermediate term trade, but also giving a pretty good example and application of beating out other traders. So let's go ahead and take a look at BIT in just a second. Let's see if anybody else has any other questions. Let's see. Do you have any tips for finding crypto that might pump? I missed Stacks and Waves pump. For some reason, some people knew that Waves will pump, but I didn't. That's all going to be based on both news and speculation. So depending on the coin, and we don't see it too often anymore, most likely not for something like Waves. I haven't seen the stacks pump. For something like Waves, where there's a big enough market cap, we don't really see as much manipulation. And something like Doge, we used to see a ton of manipulation. There was actually something like 60 to 70% of the overall supply of Doge was owned by like 10 people that would actively manipulate. And there were documents that went through basically a guy that was in a very old Telegram of those guys that would manipulate Doge. They would pump it up to something like 100 sats. This was Doge to Bitcoin, pump it up to 100 sats, bring it back down to 10 sats, pump it to 100 sats, bring it back down to 10 sats. And that was one of my most successful strategies, was actually following what those guys were doing, or really just buying anytime it went below 20 and selling anytime it went above 50 on a Doge to Bitcoin. I don't think that strategy works anymore because we're at like hundreds of sats. And it definitely didn't help whenever Doge went to, what was it, like 14 or 1600 sats to the Bitcoin pair. And I ended up selling everything at between like 70 and 110. So yeah, but yet again, remember, we're sticking to the strategy, and you can't let that affect your emotions by missing out on a trade that could go 10x instead of 2x. So yeah, I don't really have any good advice for finding pumps that are about to happen in terms of the technical sides. And finding pumps like that, you really just have to do a little bit of pattern recognition. A lot of the times, whenever you see like a big breakout like that, you can follow it for the same coin. So if you see maybe a mid-market cap coin that breaks out something like every 3 months, kind of like what we saw with Doge would break out every 6 months, but maybe a coin breaks out by a decent amount every 3 months, you take a look at what the chart looks like predictively before we see those pumps. What does volume look like? What does the RSI, the MACD look like? When you have a feel of those specific coins and you know they're coins that just pump and dump every single time, then you can actually start to predict those, or just get a good idea as to where should I set my buy target, where should I start making entries for these long side pumps, and then you just wait for it. So yeah, hopefully that helps out. Do you have your own channel too? Yeah, I do have a channel, but I don't post to it anymore. I used to use it a lot. It was my crypto oracle channel. So let's do a bit BIT analysis real quick. But yeah, once I started making content for Bybit with Andre and Greg and Crypto Beat, I don't have nearly any time to make personal videos anymore. But I'll get back to it eventually. Maybe on weekends I'll find some more time once I can manage my my schedule a little bit better. So let's go ahead and take a look at Bit if I can find it. Yep, it's right there. So we're currently sitting at $1.07. I'm actually going to... Problem with this is we don't have a lot of price action. We don't have any price action below these levels. I do have a decent strategy for whenever you're setting not only sell targets, but also just predictive levels for whenever we don't have any previous price action. What that means is if we zoom back as far as we can, and this may just be on this exchange on Bybit, I'm not sure if other exchanges have more price action, more historical price action on Bit, but you will see that where you'll go to Kraken, or you'll go to Coinbase and you're looking at something like Matic, but Coinbase listed Matic like 3 months ago, and you don't have all this previous price action to compare it to. So you have to, even if you're trading on Coinbase, you have to move over to Kraken, or you have to move over to Bitfinex and take a look at those the charts that actually have historical price action. But I think this is all of the price action we have. But somebody please correct me if I am incorrect for Bit. So we're looking at 1.072. Oh, actually that strategy is just using Fibonacci retracements and trend-based fib extensions for predicting price levels. So let's say you wanted to short, and we don't have any previous price action, you use a trend-based fib extension or a Fibonacci retracement. Again, I can go over that in particular maybe next week. I'll throw that on the list. But for the long side, we do have price action that we can look at, which is perfect because we can look at this price level through here real quick, 1.14. Let's actually throw some volume on the chart. With Ethereum, it's not as big of a deal just because we have so much daily or 24-hour volume that our volume doesn't really predict price moves except for in special circumstances. So I actually don't look at volume for something like Bitcoin and Ethereum a lot of the time, unless I'm looking at the longer time frames, just because we have so much crazy volume for those coins from institutions, from whales, as they say. But let's go ahead and look at it for a bit. It looks like we are actually pushing down towards the bottom side, but we're going to zoom into probably the 1 hour and then the 2 hour and start to analyze this area through here. In terms of our baseline support for the 4 hour, we're going to be looking at a breakout area. So basically, whenever we came down, we broke down through here. We were actually able to break back out and push up to right around 1.16. Where or at what level did we confirm that breakout? So we're most likely going to have to move into the 2 hour or the 1 hour. We can actually see these topside closes. That was nice and really clean at right around 1.09. So we're going to set this. I'm not sure if we're going to use that actually, but we will move into the 2 hour. That doesn't look terrible. There's good alignment through here, good alignment through there. That is actually a good inflection level right now at 1.09. So this is actually a pretty good line to have on your chart, not necessarily to use as a support or resistance, but to use as an indicator of when we're flipping from bullishness to bearishness within our current trading range, within our current time frame. In terms of our breakout, it looks like we do have another set of alignment right through here. So I like this level the best. I probably wouldn't zoom in further than the 2 hour. We can zoom into the 1 hour. It was most likely going to tell us something very similar, and it does. We see a little bit more slippage through that area, but that's because it's the 1 hour. We're going to see different closes on our 1 hour candlesticks than our 2 hour candlesticks. And here we have our baseline support at right around 1.06. We see very good alignment with our most recent price action, what I like to call the local price action. We have our bottom side closes through here at right around 1.069, but we did see higher lows in terms of closes. It looks like we didn't see higher lows in terms of shadows, but that's all right. That's something that, yet again, applies to identifying trends and actually kind of predicting breakouts sometimes, is counting higher lows or just seeing if we have higher lows. Based both on our shadows and our closes. So they can tell us two different things. We might have higher lows from bottom side closes, but lower lows from bottom side shadows. That's mixed signals pretty much defined. So what we're looking at right now is actually a pretty nice trading range between our bottom side at right around 1.064 for support and our top side resistance at right around 1.091. So in terms of the trend following strategy, this is a pretty decent setup. Now, yet again, we've got to apply that beating out other traders. Yes, it's a DAO. Yes, it's community, but there are still going to be people trading it and trying to profit. Has nothing to do with the format of the coin. But I would go ahead and set a nice little confirmation through these top side closes just because it's so close to our resistance. Why not allow a little bit more confirmation to be a little bit more conservative? And then what I'm going to do is push it up just a tiny bit higher because I bet there's somebody else out there doing that. So we set our confirmation at right around 1.094 towards the long side. And now what we're going to look for are our long side sell targets. And for that, we're going to have to move a little bit higher on the chart and a little bit back into our previous price action, both for this area through here and this area through here. So let's see what we have and see if we have good alignments. What we can do is we can just start from the very bottom side of this formation and we can just move up and keep an eye on both sides, all of the lines on the chart, all of the alignments we're looking at, and just recognize that pattern. Now, the first thing I would like to note is that we do see just a little bit of alignment right through here, almost perfect alignment right through here based on these top side shadows. But for a long side trade, that would most likely not be enough of a percentage to actually be a profitable trade unless you're trading with some high leverage, which we can't do in the US, but maybe you can in your country. So we're going to continue to move higher. We're going to look for alignments based on both closes and shadows. Nothing really there. It almost looks like something, but we would probably have to move into the 1 hour, more volatile, not as confirmed as the 2 hour. Remember, our longer term candlestick timeframes will always supersede our shorter term timeframes. And this is where I would probably set my sell target for this trade. So I would actually ignore this first level, although it did see some slight alignment based on our bottom side shadows through here, bottom side shadow through here, top side shadow through here. Because we didn't see much based on closes, I'm going to go ahead and set a higher sell target, also because we want to secure more percentage points based on where we would set our stop loss. So now we have our sell target. We can measure that real quick. I don't think it's going to be much. That's right around 2.91%. So again, if you're spot trading this, you're going to want to make sure you have a tight stop loss. Well, if you're spot or leverage trading, tight stop loss. But it's most likely going to be a little bit more worth it with some leverage trading. So now where we're going to set our stop loss, we're going to do the same process, except for we're going to reverse it. We're going to start from our top side and we're going to slowly move down until we can find some good support. We do have good support through this area. That might be a little bit too tight though. Again, this is something the ATR could actually help with, although because it's a shorter term trade, we would probably want to zoom in and then measure the ATR. So we would want to zoom into something like the 1 hour and then throw the ATR on the chart and use that level rather than the 2 hour. So what was that? We can actually measure this real quick, and we're going to do this over and over again, is choose levels on the chart that might work for stop losses and then measure them. So that's not terrible, negative 0.66. I don't like to set stop losses that tight usually. I like to allow it a little bit more breadth. So somewhere around 1% versus a 2.6%, that would give us a really good risk reward ratio. Now, where would 1% be? We can set it just below that level, and we can see if there's anything. Now, so basically what we're saying is we may have the best level for support or for our stop loss at right around 1.087, but we're going to set it just below because of personal preference, and again, aligning with beating out those other traders. So right around 1.03%, maybe 0.99% for this area through here. We're going to throw our long side trade measurement up real quick. And we're going to get that nice risk reward ratio that we can then log into our logbook. So that's going to be negative 0.82%. No, that's fine with me. It doesn't need to be exactly 1%. Gives us a pretty high risk reward ratio. So because our risk reward ratio is closer to right around 4, so on the higher side of the preferred spectrum, we're most likely going to hit that stop loss. So what you can do is move that stop loss down just a little bit if you have a lot of confidence in the trade, and we can actually stretch it down to right around 1% like I was initially going to. It'd be 1.01%. That gives us a risk reward ratio of 2.91, and that looks like the best situation for me for the trend following strategy, really in what I would call the short to intermediate term, probably a little skewing towards the short term for BIT to US dollar tether on Binance. So let's see if there's any other chart requests, and then we'll start wrapping this stream up. All right, what do we have? Thoughts on ADA? Let's go ahead and take a look at ADA. Love hearing the mindset. Love having you in here, guys. Keep the questions rolling. Do you have any course recommendations to strengthen our trading? No, not really. I learned everything about trading from books. I have, maybe next week I'll throw up some book recommendations. Yeah, I'll do that next week. If you guys want to join back, I've got like 5 or 6 books that I refer to as like the Bible, the encyclopedia, the dictionary, blah, 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 for trading. And then a few that are really good for mindset that I spoke about last week that go through interviews with top, just legendary traders from the 80s, 90s, 2000s that have the best track records. And this guy just sits down and asks them like 20 to 50 questions each. And you just really get to learn their mindset. So, course recommendations. There are courses out there, but they're most likely going to teach you the same thing as the books will teach you. So it's really just a matter of preference. Like if you are a better audio or audio visual learner, then yeah, courses can be great. Probably check out Udemy or Bybit Learn. But other than that, books are great, and they're going to give you the most specific information. A lot of things about courses is most people that are writing them, even like I've written a course and like made a video course for trading. You don't get 100% of the information that you would get from the book. You have to squeeze it down to fit in the 10-minute video or 10-minute lesson. So it can be very helpful, especially for introductions. But if you already have a good idea about trading, but you want to learn more specifics, definitely check out books. Books. Is the stream next week at the same time? It will be. These are always at the same time, right around 11 a.m. Central Time or Austin, Texas time, right around 1 a.m. Singapore time, and then somewhere in between if you are not in Texas or Singapore. So let's go ahead and take a look at ADA, and then we're going to start to wrap this up as we just poke through that 1 hour mark. And if you guys have any other questions for next week, I will address them in next week's stream. What you can do is go on the Discord channel, and there's a little Crypto Beat Discord chat or channel for Crypto Beat. Crypto Beat covers the weekly series or the weekly video that we do, and also these weekly live streams. So if you have any questions, any recommendations for what we should cover, chart requests, anything like that, you can drop them in the Discord throughout the week. I will check them right before the live stream next week, and I will answer them. That's how Peak Fam got his question answered today. So let's go ahead and take a look at ADA, Cardano, or like I said, I believe it's ADA, not ADA. I always just call it ADA. I call everything by their tickers. like AVAX. It's not Avalanche, it's AVAX. All right, so this is the 2-hour time frame. We're going to zoom out to the 4-hour. Really, in terms of my trading process, what I do is I really start on the daily. It doesn't really help most of the time in terms of setting up a trade because that's a longer term time frame. You're looking at like 14 to 30 up to 60 days if you're making a trade based on the daily candlestick time frame. And I prefer something like 14 to 30 max rather than moving up to 60. But what you can do is just get good levels, good general levels of support and resistance that you wouldn't necessarily see on the 4-hour, but you do see on the daily. You can move out to the weekly, move out to the monthly if you're a longer term trader. But it's always great to, even if your time frame is the 4-hour, to move out to the daily and weekly, check those out, move into the 2-hour and the 1-hour, check those out in order to confirm everything you're setting up for your 4-hour candlestick or your 4-hour candlestick time frame trade. So let's reset this chart real quick. See what we're looking at for ADA. We've actually punched below $1. Like I was talking about before, that $1 level is going to act as psychological support and resistance flip. Anytime I look at the Cardano chart, I go straight to that $1 level. I also set a 150 level usually, except it won't be relevant at the moment because we're so much lower than that. So we're going to be trading really through this we're going to be trading at least through this formation through here and probably not much else based on our past price action. So really what we're looking at through here is probably a maximum of moving back to these two shadows, but it doesn't seem too important. It seems like we can learn the same thing from our closes through here. So we're probably going to completely ignore all of the price action before we broke down from this level, or really before right through here. So anywhere between right around, what is that, January 22nd forward is what we're going to be looking at, and we can zoom into that. So first we're going to look at it on the daily candlestick time frame, and then we're going to move into the weekly candlestick time frame to actually analyze that trade setup. So let's go ahead and take a look at this while I drink some water. Okay, so first we're looking for anything that just pops out at us. Obviously that $1 will pop out at us. Anything above there, it looks like these levels through here, both these confirmations towards the downside at right around 1.04 as well as right around 1.046, but we're not going to use that just yet. I think we're going to focus on the trade between our current level all the way up to right around $1, just because that's a very large stretch. And remember, this is the daily candlestick time frame, so it's probably going to be more intermediate to long term, than anything closer to the short term. And as we move into the 4-hour time frame, we'll be able to take a look at more of a short to intermediate term trade. This happened last week too. I talk so fast that I run out of breath. I almost get dizzy. All right. So let's move into the 4-hour because there's not much that we're seeing here other than this one level through here. And I bet the 4-hour is going to tell us the exact same thing. 0.8515 towards the bottom side. We're not most likely going to be using these bottom side closes. We're going to focus on the 4-hour. And now we're actually going to draw some lines that we may use for our trade or our position outline. So we really have to zoom in here. It looks like all of this is kind of the same price action, but it's just such a large stretch, between 78 to $1. It's a 20% plus trade. So let's go ahead and look at for some long side confirmations, maybe some short side confirmations as well, although it's really kind of a bottom falling out, a trapdoor effect for the short side because we don't see much price action below this level. We do have very historical price action, but our more local price action will always have more influence on the chart than our most historical price action. So you may on your Bitcoin chart see a resistance level from 3 years ago that's like super perfect. It's got perfect alignment on the 4-hour, on the daily, but you want to focus on probably the last 3 months, 6 months, 1 year rather than 3 years ago, because that's what current traders are thinking. That's what current positions are looking at. The whole idea about support and resistance and the psychological aspect of it is that people are buying and selling at these levels because it's most likely where they previously bought or sold at. So if you buy at $1 and we push above and we come back down to $1, that's where we're going to hold, especially if traders are trying to sell out. It's a whole thing. I'll get into it next week. The actual psychology of support and resistance, how that relates to Dow theory, everything like that, because I really enjoy that. We're talking about Dow theory. It's one of my favorite little tenets of trading that a lot of people don't reference. Again, All right, so we're going to set one level right through here, but I don't think we're going to keep it. I think we're going to manipulate that, move that down maybe, and see what looks great. I'm actually going to move this above this breakout area. So now I'm focusing on this area through here. This nice little short term, we can measure that real quick. Measure that little pump, even from our breakout area. Doesn't need to be the whole thing. There's a total of right around 7.36% from, let's see, close to close, right around 6.72. That's perfect for trading, in my opinion, especially for the short term. So we're going to set that right through here and just set that at that same level. And then we're going to go ahead and set that sell target, or that entry target, excuse me, right above that level. Here's going to be our entry. We're going to need to see a confirmation on the 4-hour chart. So that means a 4-hour close above that level. Now, what are we looking at down through here for the short side? Actually, I like that level a lot. I wonder what that means back through here. So for the short side, it's the tough part about the short side on a trade like this where the bottom is falling out is that you don't know where to set that exact sell target to a reasonable extent. Like here, it makes sense because we have previous support and resistance slopes right around, 8.5. That's probably the maximum sell target we're going to set for this long side trade. But for the short side, it's like double bottoms. They don't usually work out for the short side. Usually we see it fall through that level. Should I use the Fibonacci retracement? Where should I use it based off of with all of this super local price action? It's a little bit tougher. So I just like to be a little bit more conservative in what you can actually do. If you don't like using the trend-based extension on the Fibonacci or the Fibonacci retracement, is you can set preset sell targets whenever we don't have price action in general or any historical price action. You can say, all right, I'm just going to sell at -5% or -5 and then -10%. Then I'm going to set my stop loss at positive 2.5% if you're on the short side. If you're on the long side and we don't have any price action above, you can set your sell target at +5%, another one at +10%. You move your stop loss up along the way, and then you set your stop loss, or you initially set your stop loss at -2.5%, and then you move it up as the trade continues or as it succeeds. So as we hit that first sell target, move it up 2.5%, hit the second sell target, continue that. And it's like, you could call it actively following the trade. It's another specific strategy, but it's just something that I don't think I could do because you have to be very active as a trader rather than just letting your trades go through, and you'll see those emotions affect you a lot more. So for the short side, that's probably what I would recommend for this situation, is either setting it at something like negative. Let's go ahead and actually check that stretch down to here, -5%, maybe negative like 4.5%, just for any type of balance, any type of possibility. But because we don't really have good confirmation at that level, we're not making a new absolute low. It's just not as much of a confirmed trade like we would see towards the long side. So although we're trying to be unbiased and we're trying to allow for a trade both towards the long side and the short side just doesn't look as good. That's going to happen sometimes. So for the long side, let's complete this and then let's wrap this live stream up. It's taco time in Austin. So if we do see that nice close above right around 80.03 or 0.8034, we're going to open a long side trade towards our sell target through here. Now, do we see any other sell targets? Could we set 2 sell targets? That's another thing. Maybe right through here, maybe slightly below that level. But where are we going to set our stop loss? So that's something we kind of have to balance for this situation. Do we want to set a higher sell target and have a larger stop loss margin? Or do we want to set a little bit lesser of a sell target, a little bit closer sell target, and then we can have a tighter stop loss? We're going to look at both sides and we're going to kind of balance those or compare them. So for that stop loss, we're looking at right through here. What is that? That's super, super close. 0.08 to 0.79. Yeah, that's tiny. You could actually set it all the way down through here with, well, yeah, based on those bottom side shadows. That makes sense. If we see a low with a little bit of margin, -2.6%, that's perfect. I don't know why I was like ignoring my own support. Wasn't even considering it for a stop loss level. It's the colors. I keep switching up the colors I use. All right, so there's our stop loss level at -2.6%. So obviously we don't want to set that sell target too close because we want a good risk reward ratio. So we don't want to set it like right through here where it's 3.67. We want to set it up. We want to set it all the way up through here, right around 5.98. But again, beat out those other traders, bring it down just slightly, 5.81, 8501. Could beat them out just a little bit more. You can be a little bit closer. And that's going to be 8492. I bet we can move it up a little bit. And that's going to be our sell target. Just a little bit. 8.51, 8.501, 8.496. Perfect. You can set any sell target whenever you type it in. You can actually change these lines as well to make them exact. So long position, final trade, ADA Cardano to US dollar tether, correct, on Bybit. Here we have a stop loss of negative 2.65%, a sell target of plus 5.81%, risk reward of perfect risk reward of 2.19. And there we have our long side position with the thesis and all. Basically, if you wanted to write down your thesis, you'd write down a lot of what I just said over the past couple minutes. Take notes along the way, or just try to remember what you were thinking for each of these levels. Throw it all in your logbook, beat out those other traders. And if you have a streak, manage those emotions. I'm just trying to summarize everything. All right, please Ripple. Let's see. Is it bit or bit? I think it's bit. Bitcoin now in descending channel or no, because if you use different time frame, different results. I can take a look at that real quick. I got time. And then, okay, so for Ripple or XRP and AVAX, I'm actually going to have to look at those next week, but I will keep those listed. Sorry, guys. But let's take a look at Bitcoin real quick. It'll be fun. Bitcoin, you said descending or ascending. Descending channel order. Which time frames? We can look at all of them. So for Bitcoin, I like to start on the weekly. Descending channel. Like through where? Through here? Okay, well, it depends on the time frame. Through there? No. Descending channel. Do you mean this whole piece through here? That's it's not necessarily a channel, it's more of a triangle, because we are seeing a tightening of volatility, and we actually did see a slip through here. So I usually don't draw diagonal trend lines at all, but just to determine the overall like trend. I don't use diagonal trend lines to trade based off of, so I wouldn't say, all right, if we break down through this level, then I'm going to open up a short. If we break out above this level, I'm going to open up a long. But you can, or I do draw them a lot of the time on the chart just to get a general shape. But I wouldn't trade a breakout unless we saw like a horizontal support or resistance flip that was really confirmed that we broke through. Okay, let's see. Descending channel. Well, I'm just going to take it as you mean like a trend, descending trend. Not in this time frame. I can take a look at maybe the 2 hour. Descending, like really short term descending. 30-minute. Descending channel. I mean, yeah, that's a bear trend. That's a yeah, kind of. If you could let me know what time frame you're thinking about, then I'll probably get a better idea. But in terms of like the intermediate term, all this price action through here, I just call it a tightening of volatility. So once that tightens all the way, basically think of it as a spring, like being compressed as we move along the time frame, and it gets compressed and compressed and compressed. Once it's released, it's going to boing. So it's either going to push really hard in the bear direction or the bull direction. Once we kind of tighten up volatility to a max. So that's going to be the same thing for the 2 hour, same thing for the 4 hour. Actually, on the 4 hour, we've got higher, well, no. It's kind of the same thing, but it's a little bit sloppier on the 4 hour. Maybe. That makes more sense to me. We're seeing higher lows, and we're actually seeing a horizontal resistance for the top side. So rather than being rather than being like a wedge, it's a right angled triangle. So this is what we have towards the top side. And we're pushing up against this. We're forming higher highs or higher lows, sorry. And we are basically butting up against that same price level. So if we can see a push above this level with a nice amount of confirmation, I would probably be pretty conservative. Wait for something like 45,700 and a close on the 4 hour and the daily above that level. But if you're a riskier trader, then you can do it earlier if you'd like. But that's what we're looking at for Bitcoin. at the moment is really we're just trying to spring up. We're trying to spring and we're trying to ascend and we're trying to break through this topside resistance at 44,500. That's what we got, and that aligns with the daily topside closes as well. It aligns with those, like we saw slippage from the 4 hour, but we move into the daily and it makes a lot more sense. And it aligns with this breakout area through here. All right, so wrapping the stream up. Anything else? I think that's about it. Next week's stream will be at 11 a.m. or the exact same time, 11 a.m. Texas time, whatever it started at 1 hour ago exactly. Next Friday on YouTube as well. You can check that out. We will be covering, what should I cover? If you guys have any suggestions, I can cover Dow theory. I can cover setting proper support and resistances. I can go through stop losses again. There's a lot I can go through, but I will update you guys on that next week. And I will get to these chart requests for AVAX, Avalanche, and XRP Ripple. Thank you guys for the suggestions. Thank you guys for being such a great audience this week. I really appreciate it. I hope to see you guys next week as well. Have a wonderful Friday and a wonderful weekend. See you guys later. This has been Brandon from the Bybit YouTube team. Check out Crypto Beat. Subscribe to the playlist and throw those notifications on because we work pretty hard on those videos. They do come out every single Monday. They're a lot of fun to watch, and you learn just a little bit about crypto every single time. Theory you mentioned sounds interesting. Dow theory. We'll check it out next week. I'll write that down. Thank you guys so much. Please have a good day. Have a good weekend. Bye.